Paschal Donohoe, please.
Thank you, Count Corda. And before I begin, I want to first offer my own condolences to those who have lost loved ones as a result of this disease. And I also want to pay tribute to all of our public servants, healthcare professionals, carers and indeed shop workers. Additionally, I want to acknowledge the remarkable solidarity shown by the overwhelming majority of Irish people towards their own family, friends and neighbours, but also towards strangers and their broad community as a whole over the past number of weeks. I welcome this opportunity to present the Stability Programme update to the House today. This is to allow Dáil Éireann an opportunity to discuss and debate the document before the Government formally submits the final version to the European authorities at the end of the month. We have kept our assessment to the current year and next year. There is simply too much uncertainty to do otherwise, and we have presented scenarios in our presentation. The economic projections set out in the Stability Programme have been endorsed by the Irish Fiscal Advisory Council, and again, this is a legal requirement. The discussion of our public health and our economic status is honest about both today, but it's also honest about our future prospects and about what we can achieve. We can and we will renew the economy of Ireland when we have recovered our public health. But we are now in the midst of a severe recession, both globally and domestically. For Ireland, my department is expecting gross domestic product to fall by 10.5% this year. This scenario rests on the assumption that the current containment measures remain in place for about 3 months, covering most of the second quarter of the year, and are incrementally eased thereafter. Recovery in the second half of the year is accordingly steady, while behavioural changes on the parts of firms and households mean that the level of economic activity will clearly be below what would have been the case had there been no pandemic. So we are, Cahirlock, now considering a U-shaped recovery. It is evident to all in this House that jobs, that our people, have borne the brunt of an unprecedented economic decline. Our labour market has been turned on its head, from full employment to one where unemployment has risen at a completely unprecedented speed. As highlighted yesterday, our unemployment rate could hit 22% in the second quarter of this year, having been 5% as recently as January. But let me again emphasise, we can and we will recover. Our economy can grow again next year. Employment can grow, unemployment can fall, and our public finances can improve. This is because, as the experience of the last financial crisis and Great Recession shows, our economy, our jobs market are very resilient and have real underlying strengths that this crisis has not altered. In particular, the international traded sectors of our economy, like technology, like pharmaceuticals and medical devices, have shown themselves to be highly resilient during the current crisis. Moreover, we have entered into recession because of a health crisis, not because of imbalances in or mismanagement of our economy. In fact, none of the imbalances that characterised our economy previously, that of credit growth, that of borrowing from abroad through a balance of payments deficit, are evident at present. Indeed, household and the balance sheets of large companies are in a much better position than a decade ago, at least on an aggregate level and in many cases for many, many individual companies and homes. So once the pandemic is contained, we are in a position to recover. The gradual recovery assumed in the second half of the year is projected to gain momentum, with the economy growing by up to 6% next year. We can expect economic activity to reach its pre-crisis level in 2002, and the central focus of our recovery effort will be getting as many people back to work as soon as our public health allows it. We want to make the recovery a job-rich one, like the recovery from the financial crisis, and we will ensure that the right policies are put in place to deliver this in the context of a fundamentally different new normal in our economy. So it is possible, for example, Cathaoirleach, that we could see, if we are successful in our public health efforts, and if we see the global economic environment perform in the way we are currently projecting in the Stability Programme update, it is possible that we could see employment growing again next year, that we could see an additional 115,000 jobs put back in homes, in communities, and that this will reduce the unemployment rate to below 10%. At 10% or even below 10%, it is still too high, but it is a significant change versus where we could be in the coming weeks. A strong and a diverse jobs market has been the engine of our recent economic success, and we are determined that this engine will once again be able to create jobs, be able to provide jobs for all who want one, as we move into a post-COVID era. Cathaoirleach, I'll now update the House on the budgetary situation. In budgetary terms, the responsible manner in which our public finances were managed means that we are in a position to absorb a short-term and significant increase in borrowing. As you know, we achieved a surplus of 0.4% of national income last year. It would indeed have accelerated considerably this year. We also set up a rainy day fund, and we have been steadily reducing our debt ratio in recent years. That is the foundation of our ability to respond now. But for this year, a sharp deterioration in our public finances is now expected, with a general government deficit of approximately €23 billion, or 7.4% of national income. And to be clear to the House, this projection is based on assumptions in relation to public health, in relation to what will happen with economies elsewhere, and it of course is only based on policy decisions that have already been made. So it excludes decisions that could be made both by this House, this government and the government yet to come. If those assumptions change, and indeed when they change from a policy point of view, or indeed if the economic recovery is delayed, this deficit itself could change too. It could indeed be as large as is indicated in the Stability Programme update, as €30 billion, which would be about 10% of our national income. However, in the event that we do recover in the way that I have outlined, and I have every confidence that we can when our public health allows it, again, it is very feasible to see an economy that begins to recover, albeit at a pace in line with where we are with public health this year, but see an economy growing next year by approximately 6%, and then with really important qualities in our labour market, creating jobs. This in turn will create the ability to reduce the deficit next year. But the deficit of this year arises from a combination of decisions that have been supported by this House. And I want to emphasise again my appreciation for the way in which many of my colleagues here in the Oireachtas have approached decisions that we need to make at speed. Measures that were made to support homes, to support our citizens facing a huge loss of income, and to support firms in keeping jobs. That was entirely appropriate. It's the way in which budgetary policy should be used. The very reason we run surpluses in good times is to ensure we have the resources available to us at times such as this. The House will be aware of the commitments that have been made from an expenditure point of view, of what has been done to support income, and the additional funding that has now been provided is based on the projections that I have updated the House on before, and will, of course, in turn impact on our public finances. The debt to national income ratio is forecasted at 69%, an increase of 10 points. Meanwhile, our debt to GNI star is expected to increase to 125% for the year. To put those figures in context, those changes are in line with the international norm. Our budgetary position is very much in line with that of other advanced economies responding to the crisis. It will mean that within the Stability and Growth Pact, it is very likely that we will see the triggering of an excessive deficit procedure, but we will share that with many other countries within the European Union. In terms of repairing our financing, our public finances, economic recovery can drive most of those improvements. Growth will boost tax revenues. It will reduce unemployment, both of which will benefit the public finances. Furthermore, if the right decisions are made at international levels, we can avoid the kind of pain of the last crisis. However, that does not mean that this or a future government will be able to do everything. Our deficits will have to be reduced. Our national finances must return to a position of balance again. And the daily debates about making choices within limited resources that have existed before this crisis will, of course, endure and continue after the crisis has passed. What we value, what we prioritise, and how we pay for it will continue to be a central debate of democratic politics. We will be able to fund our deficit for this year and next. The situation is currently favourable. The NTMA has approximately €22 billion of cash on their balance sheet at the end of March. Part of this was used to refinance an €11 billion bond that matured this week. An additional bond matures in October, and there are a small number of bilateral loans that mature this year. The NTMA will also finance the exchequer deficit of €15 billion, partly through cash balances and with new financing, which will be both long and short-term in nature. The NTMA has now announced its 2020 bond funding range schedule, and importantly, we can borrow at less than 0.5% on 10-year debt at the moment. I also note that there are no bonds maturing for next year, which gives us important space. So the state is in a strong position to fund the deficit that has developed. But equally, of course, it will be essential that as our economy improves, so do our public finances. And in conclusion, Cathaoirleach, let me be unequivocal. Ireland will recover from this crisis. We will come out the other side of it. We have the economic and we have the social capabilities that will pull our country through. This government, the next government, this Dáil, can and will make decisions that will get our citizens back to work, that will reopen small businesses, and that will get trade flowing again. And we will be a stronger, more resilient, and indeed have greater capacity as a state that I'm sure will be needed to meet the needs of our society as a result. That recovery will take time. It will take determination, and it will take significant resources. It will involve difficult decisions, but we can rebuild our country's economy. Because when you consider the alternatives to the measures we've undertaken, you quickly realise the value of a caring society. The government acted quickly and we acted decisively in the interests of all our people, and that intent was supported and strengthened by this House. I've made the point on many occasions that I am the Finance Minister for an economy within a society and not a society within an economy. And as we have seen over the past few weeks, Ireland is always more than just an economy. It is, of course, a society. And the Stability Programme update provides the backdrop against which decisions to protect and to renew both will be made. Thank you.